بسم الله الرحمن الرحيم والصلاة والسلام على رسول الكريم. السلام عليكم ورحمة الله تعالى وبركاته, and good afternoon. First of all, I would like to express my thanks and appreciation to Ethis crowd for their kind invitation to this webinar. Our main discussions or our main focus will be on the financial planning. Before I go into some points, key points in our discussions through the slides that will be shared with you, inshallah, later on, I just would like to have some brief update or descriptions on the financial planning. And the reason being is that this is a very young industry. We are talking here about 15 years. People even in the Islamic finance industry, some of them are not aware about the financial planning industry, which actually is a part of Islamic finance. People are aware about Islamic banking, Islamic insurance, which is the kaful, Islamic capital market, but a little bit about wealth management and financial planning. And if they hear about wealth management, they will hear it as a form of products offered by some banks in their wealth management departments or private banking. But as an industry, as a career, as a professions, not many people basically are aware about it. This is why maybe I'd like to just to briefly touch upon this before I go into the concept and some other aspects. So basically, if I may start talking about the members, for example, of the financial planning, we are talking about now 13,000 members under the body of the Malaysian Financial Planning Council, which is basically a professional body promoting and enhancing financial planning industry in Malaysia. If I may take some numbers, financial advisors which are basically registered at Bank Negara, there are around 33 companies and registered with the Malaysian Financial Planning Council around 29. The financial planner registered with the Security Commission around 31. So here we are talking about a combination between the financial advisory firm and financial planning firm. We are talking around 64 firms and over above 13, 14, around maybe at the most 14,000 members in the field. And this is compared to the global statistics and number, regarded a relatively small number. Just moving maybe to one point before we start, I would like just to take the financial advisory populations versus the financial advisory professions. If I may take, for example, Malaysia, populations, talking about of 2015, 2016, 31, above 32 million. Number of financial advisors, 618. Here we are talking about the ratio about 50,500 versus one financial advisor. Now moving to the UK, we are talking about 65.6 million. Financial advisor, 24,000. So we are talking about the ratio of 2,600 people versus one financial advisor. Moving to Australia, talking about 24.1 million. Financial advisor are 25,000. Here the ratio is much better. We are talking about 950 versus one financial advisor. Now taking the example of Singapore, populations of 5.6 million, but they have 3,500 financial advisors. Here we are talking about 1,600 population versus one financial advisor. Now, just to see how is the emerging, how the financial planning in Malaysia is an emerging market and the opportunity is there, and it can be as a career path for many professionals or even future graduate from the university related to the financial planning, business and finance, is that if we take the ratio of Singapore, which is 1,600 population versus one financial advisors, we are talking about a number of 19,500, meaning that to get the gap in the professions, you just minus 19,500 minus 618, you will get the gap of the professions in this industry, meaning that there is a lot of work to do, more work to do, and the industry is still emerging, and it is regarded as a young and professional industry. And of course, as far as the professions of this industry is concerned, so we have a body like the MFPC, which basically provide a registered financial planner and Shariah financial planner. We are talking about 2,800 above or more than 2,800 qualifying. We are talking about APFAM that provide also CFP. We're talking about 2,000 above 2,500 qualifying, and MFPE, which is a CHFC. We're talking about over 5,600. So all basically including the FAA, which is the Association of the Financial Advisors. We are talking about, as I mentioned, a number of 618. But still the ratio is very far. We are talking about 50,000 versus 1, compared to, for example, Singapore. We are talking about 1,600 versus 1, meaning there is a gap of around 19,000 professionals needed in the industry. So this is just a brief descriptions on the industry update about these professions, which is a little bit regarded as a combination from banking, a little bit from Takaful, a little bit from Islamic capital market, then from the body of what's so-called the financial planning. What you see in banking is basically a little bit part of it. They are more driven towards investments. Some of the insurance companies, they are driven towards insurance, selling insurance or even Takaful. And from the investment side, they are more driven towards unit trusts and others. But talking about the financial planning, it's a very comprehensive, basically, package, as we are going to see, which basically deserve more attentions. And it is, again, within the direction of the regulators to improve and enhance the financial literacy of the populations in general, especially the young generations, to ensure that their wealth is properly managed, properly monitored, their saving, their investment, their protections, their retirements, basically their educations, and so on and so forth, are well planned within the norm and the standards of the financial planning industry. So let's move on briefly within the time given. I try to just to be brief because we have a lot of points to cover, but maybe you have the chance again to to talk about it. Of course, this is the objective that has been already provided to you. I will just escape it. Talking about, here I have to be very specific. We are talking about Sharia financial planning or Islamic financial planning. So why, again, there is a counterpart in the market, which is basically the conventional, what's so-called financial planning. A conventional financial advice, similar to the bank, conventional bank, Islamic bank, insurance, Takaful, capital market, Islamic capital market. Here also we are talking about the financial planning, but our focus in discussion will be more towards the Sharia financial planning. That's why we are starting with the wealth, by saying that Sharia, basically financial planning, can be understood from the position of the wealth itself, because we are dealing with what? Wealth managements and financial planning. So the subject matter, the core subject in this basically professions is wealth, al-mal. This is why it has to be understood from Sharia standpoint. As you know, Sharia throughout the verses of the Quran al-Karim and the Hadith and the ruling of Sharia talk about wealth throughout all the stages, stage of creation, stage of accumulation, stage of basically investments and expansion, stage of distributions, and so on and so forth. In each stage and each cycle, in each station, Sharia has specific rules, and Sharia has a concern how the wealth should be accumulated, how should be acquired, how should be managed, how should be spent, and so on and so forth, to ensure compliance in dealing with the wealth. Therefore, there are guidelines, as I mentioned, about Allah subhanahu wa ta'ala and the Prophet and the literatures of Sharia, that basically the financial advisor or the financial planner should basically understood or should understand and make the clients dealing with, having a proper understanding of this to ensure compliance. The compliance, as I mentioned, is relevant to Sharia in all stages or in all type of executions. Talking about the protections, when we talk about the kafel, should be Sharia compliance. Talking about the investments, growing the wealth, should be Sharia compliance. And it should be conducted on the relevant Sharia guidelines. You tell me what are the Sharia guidelines? I think the financial planner who is licensed, sorry, who is licensed and practicing is aware about these guidelines. And definitely we always take the Islamic banking, we take the takaful, we take the Islamic capital market guideline as the benchmark. So how to define the financial planning? Quickly on the definition. Just I will zoom to the MFPC definitions, which is a process or a methodology of assessing client in determining their financial goal, objective, and priority, and the resources to meet that in an optical and practical manner. So as you can see, financial planner is basically is a methodology. It's a process to assist the client. So there is a assistant features in it, number one. Number two, the clients or the person has a financial goal, financial objectives, and sometimes suffering from some financial difficulties. And here the financial planner will come in order to look at the objective, assess the status of the clients, looking at his asset, liability, looking at his cash flow, investment, if any, protection, if any, and provide methodology to achieve those objectives within such a priority, within the limitation of the resources that the client has in a very optical manner and practical manner. So you cannot just go beyond the means of the client. Security commissions says the person who carry on a business or analyzing the financial circumstances. Why analyzing the financial circumstances? We will see later on. But in practice, basically, the professions is based on data gathering, as we're going to see. Then those data gathering will be analyzed. Then some financial ratio will be used. There are around 9 financial ratio will be used to determine the health of the a person. In other words, if I want to describe a financial planning in a very a simple way or in a layman language, it's basically like a doctor. If you feel yourself not comfortable in your body, so you just go to the clinic and you do a full a checkup. Then after that, from the analysis from your blood, you know, pressure and the weight and so on and so forth, urines, then he will give you a report. Then from the report, there are some thresholds you have to be within to maintain the health. Otherwise, some recommendation and some medicine will be given to you to improve your health. So financial planning is the same. If you have financial difficulties, or even if you don't have financial difficulties, if you want to know your financial health, so you may go to the financial planner. Then there are some data to be gathered, you know, that we will share it with you, which is for use. Normally we use like the construction of the financial plan. Normally it will be in a form of report. So there are some data and information to be gathered about your assets, about your liability, about your cash flow, in cash flow, out cash flow, and so on and so forth. Then running some of the ratios, then based on that, we will see whether the financial ratios are within the recommended threshold or the beyond that. Then the financial plan will give you recommendations how to improve your health, financial health, in order to be within the recommended threshold. So that's similar to going to a doctor or going to the clinic. You just go check up, then you find the result. There are some thresholds related to the basic liquidity ratio, some related to the saving ratio, sometimes related to the liquid asset ratio, debt ratio, and non-mortgage ratio, net investment solvency ratio. All this will be run, around 10 ratios will be run by the financial planner in order to give you a recommendation. Now on the Sharia part of it, so what is unique about the financial planning on Sharia is to add, of course, the Sharia, meaning that all this exercise of engagement with the clients and whatever future recommendation that can be given, it should be based on Sharia. If we are talking about protection, so we'll pick up the kafal. If we are talking about investment, so we'll pick up Sharia compliance investment classes, sukuk, money market instruments, structured products, fixed deposit, the Islamic FD, and so on and so forth. So we take this one. If it's education planning, if it is liquidity management, if it is a real estate planning and distribution of the asset, zakat, all this basically will be driven by the Sharia ruling to ensure the consistency of your advice. So as I mentioned here, it's included recommendation should be in Sharia. For example, if you want to improve your asset and you put some investment asset, so you cannot put it in an interest-bearing instrument. So you have to pick up the Sharia compliance investment. And alhamdulillah, if we're talking about, at least in the Malaysian market, all the investment classes are available. Talking about sukuk, talking about money market, talking about structured product, talking about stock market, talking about ETFs. So a lot of venture capital, private capital, you just name it. So there is a variety. It depends, of course, variations of the rates and the type of the risk. So you can do your own planning. And not you do it, basically, you will engage your financial planners, basically, to do it if you agree on the plan. Because at the end of the day, whatever advice and planning will be provided to you in a form of a comprehensive report that determine your status, financial health status, and what are the recommendations that you should undertake in order to achieve your financial goal. Quickly on this objective of the financial planner, providing direction to the person to financial decision. Normally, financial planner will not make decision for you. So it will help you to make your decision. So at the end of the day, the decision is yours. Why? Because it may have an impact on your financial or your impact or even of your lifestyle. For example, if you need cash and there is no money to get it. So one of it is maybe to dispose some of your assets. So if you have 2 cars, maybe you may sell 1 car. If you have 1 car and motorbike, you may sell your car and keep your motorbike to use that cash for whatever planning, according to the advice of the financial planner, to adjust your portfolio to improve your situation in order to enhance it and basically getting to a better financial state. So at the end of the day, it's your decision, but the financial planner will help you basically to drive you through and do the executions. Of course, a proper fulfillment of the obligations, a recommendation of the financial planner as prescribed by Sharia, conducting financial management process in a way which is compatible with Sharia, because it's include also debt management's approach. Criteria, I just go again quickly, so I just to make sure I finish the major points, just touch upon it. You still have the slide to go through it later on briefly or in details. Now, again, the financial planning is in a system. From a Sharia standpoint, it's a help. So like the person is helping another person to manage his finance, to achieve his financial objective. And keep in mind, financial planning is not related to high net worth individual only. That's the focus of the private banking. That's the but as a professions, it goes to the lower class, middle class, and high net worth individual. Everyone is the same. And from my personal view, I always say it's from my personal view, the skills and the competency and the knowledge of the financial planning will be demonstrated in a situation when the client has financial distress. Why? Because if he has a surplus or is a high net worth individual, so basically the way you manage his wealth is just a matter how much additional profit you make. But the one that has having a financial distress, how you put and manage his finance and manage his debt and manage his portfolio within the limited resources that he has, and exit him slowly from the financial distress and achieve his financial goals. To me, that's where the competency and the knowledge and the skills will be showcased by the professional financial planner. Again, financial planning should be in line with the objective of Sharia. MAQASID Sharia is a very important component. Why MAQASID Sharia? Because I think maybe you will skip this one because MAQASID Sharia will come again. Why it is important? Because of the categorizations and the priority. So you cannot advise him to do sadaqah and he didn't pay his zakat. You cannot design his package, his holiday, and he didn't perform umrah or he didn't perform hajj. You cannot advise him to give donations to strangers and maybe his family and close family and neighbors are suffering some financial distress. Priority is very important in the context of MAQASID Sharia to make sure your actions, basically, management of the fund is consistent with Sharia. Balancing between the existing asset and liability also in the future goal as is very important. And the concept of worldview, well, we'll talk about it in the coming slides. Objective is to determine the financial goal. That's one of the objectives by definition. He has a financial goal he wants to achieve. I want to retire with 1 million. I want to retire with this, that. So then the financial planner would engage him whether this financial goal will be achieved or not. It's a process and methodology as I mentioned it, and as I'm going to highlight later on. It is, as I mentioned, for the fortunate and unfortunate people as well. And one important point here is that successful of the financial planning advisor recommendation is driven how much disclosure of the client to the financial planner. If you disclose your asset in a very appropriate way, you give more space and more comfort zone to the financial planner to provide proper advice to you and guide you accordingly. But a non-disclosure of the asset may put the financial advisor in difficulty to advise you. And of course, one of the things is to identify, understand the financial problem. What's your problem? What you are suffering from? And if you don't have, so the screening will determine the gaps. And based on that, recommendation would come in. One very important aspect here related to MAQASID Sharia, related to the worldview, which is the type of investment from a Sharia standpoint. There are always two angles. The first one is the investment in this world. It's a form of cash and assets. You have account, you have a bank account, you have access to the account, you know how much is the balance and so on and so forth. But the other thing, which part of the obligations of the financial advisor to provide it to you is the investment in the hereafter, which is related to the reward from God, which is in a form of hasanat. You cannot access this account. You don't have full details of this account, but definitely the investment of this account has a very high value. And as you know, reward and punishments in the hereafter is how good is this account. So the investment in the hereafter, and here the financial advisor should package in the advice sadaqah, for example, package the waqf donations and social activity that has an impact on the Muslim, so he can reward more reward in the hereafter. So the investment should be, both should be targeted in order to ensure successful in this world and salvation in the next. Incorporation of MAQASID Sharia, as I have mentioned it, whereby we have ad-daruriyat and we have essentials and the needs and what's so-called embellishments. This one should be well understood by the financial advisor or the financial planner in order for him to give a proper recommendation consistent with the ratios and the weightage and the threshold of Sharia. So again, you cannot give a focus on tahsiniyat and compromise on hajiyat, or you cannot push for the hajiyat and compromise on essential or daruriyat. So the sequence should be observed in order. This is some of the key points or the key aspect of the financial planner. Maybe some of the questions that we received that they want a sample of financial planner. Maybe later on, Ethis will share one sample, maybe share with you some sample to provide it for them. But normally, it has personal data of the client. It has an objective. The client has a specific objectives in his mind when you engage with him. So these are part of it. The issues and problems faced by the client, what kind of problem or issue, each one has a problem. The other one, his saving ratio is down. The other one, his debt ratio is down. The other one, his solvency ratio is down. The other one has no education plan. The other one has no protection plan. The other one has no investment. The other one has no will, has no estate planning. So each one has a problem. The other one has no proper retirement, not sufficient fund upon retirement. So every person has a different problem and issues. And basically the objective and one of the obligations of the financial planner is basically to put his hand on the issue and put proper recommendations within the recommended methodology of these professions. Assumptions and some economic index are used to run some calculations. Balance sheet of the person, the cash flow management, the in cash flow, out cash flow, and zakat, if applicable, taxations, if applicable, risk management, which is basically the takaful planning, the investment, which is the investment planning, estate planning, and education planning. And at the end of the day, the recommendation comes, then the implementation. That's basically the body of the financial reports that normally will be produced by the financial planner to be handed over to the client. Then later on, it comes the stage of what? The executions of the plan, or some variations upon the discussions. Then after that, the monitoring. And everyone basically can run his own financial plan. Everyone can screen his financial health by himself. You know, there is a formula basically, and there is a what's so called some points, we call it in these professions the fact-finding sheet, basically, which is the information to be recorded by the financial planner, and based on that, so the calculation and some ratio will be run to see what's the status of the client. This is a more additional aspect recommended for the financial planner, which are mostly Sharia-driven features. Number one, financial planner should ensure that the Sharia guidelines are always applied throughout the stages of the developments of the financial plan, the execution and monitoring. Financial plan should avoid any means of non-Sharia compliance elements, including investment and others. Proper discharge of the financial obligations, like for example, zakat, hajj, and so on and so forth, past debt, and so on and so forth, should be properly managed. The financial plan is required to educate the Muslims on the financial, on the Sharia procedures and requirements. Sometimes you may have a client or a person has no background on zakat, for example, or investments, or the right of his family, right of his children, right of his neighbors, right of his family, right of God in the world itself. So part of the financial planner is to educate and advise this client, you know, because he may come up with some recommendation. I want to do this, I want to do this. So if what he's planning to do is not Sharia compliant, so basically the financial planner should redirect him to the right path, and this is not Sharia compliance, this shouldn't be done, so it should be done this way, and so on and so forth. So it is part of the ongoing educations that should be provided by these professions. So again, it is the responsibility of the planner that the plan that is designed with his collaboration, free from any what's so-called objections from Sharia angle, which focus again on the dual investments in this world and the hereafter. The main components of the financial planning, I will just list down them quickly and briefly. Is number one, setting the goal, the objective, and priority. That's the first basically stage of the financial plan. If you have the goals, objective, and priority set, so basically the next stage will be gathering the information. In my view, this is one of the very crucial one because you have to disclose properly the information, and you can test it on yourself, so you can have a better calculation on the ratio. Then you analyze this one and assessing the financial status and the financial health of the person. Then the stage 4 is you develop the financial plan and present it to the client for discussions. Normally in Malaysia, they will do it here free of charge. By right, it should be paid also with fee, but in other jurisdictions, they may pay it. It's different of each country because it's an effort actually to provide such kind of services, but most of the time it is provided free of charge. Then the execution plan, if you agree, so the execution comes in. Then after that, the monitoring of the executions and the reviewing of plan from time to time to make sure you are moving on the right path. One of the elements which are not very visible in the financial planning, which is the understanding of the financial plan or what contract they are using. Sometimes, you know, they just do work like this as a financial advisor or financial planning, but they have to be aware that their engagement is based on 3 major contracts. Number 1, ijara, because you will be engaged, you will be hired to perform the job. So ijara rules will be applicable to determine the relationship between the client and the person. It's a service, ijaratul amal actually. And number 2, the wakala, sometimes you'll be appointed on behalf of the clients to do some of the executions component of the plan, like the investment, like the protections, and so on and so forth. So the wakala will come in, and the ju'ala, sometimes it is related to the investment or the overall performance of the portfolio. You may provide some incentive. So it has also to be understood between the clients and the financial planner that these are the drivers contract that determine the relationship between him and the other party. So as a result of that, they should be also well understood, well comprehended to make sure that you are acting within the rules of ijara or within the rules of wakala or within the rules of ju'ala. And I think with this, we come up to somehow, and very brief, what's so-called, cover the most components of the financial planning industry. Of course, each component has its own discussions, but you know, overall, this is just a snapshot of the what's so-called financial planning. So you can go for further reading. You can go for you know, checking some of the bodies, professional bodies like MFPC, APAM, and others, FAA, to know about it. It's a profession that's also open opportunities and give additional knowledge, especially as we just mentioned. It is a young industry, talking about 15 years, and the gap of the financial advisors is still huge in the market, and the regulators, central bank and security commissions are very serious to keep promoting and enhancing and pushing the financial literacy in the market here, especially in the generations, various generations, starting even from the schools, primary schools, and goes up to the university to make sure that everybody is equipped with the financial knowledge to make proper decision, manage his wealth properly, manage his debt properly, and ensure that the wealth is managed according to the Sharia rules and principle. Wallahu ta'ala ala wa alam. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Okay, well, thank you so much. It was very well presented and good content. Very well all this touch of the industry. As Prof. Hassan mentioned, it's still a young industry and they're still looking for a lot more people to join the industry. And if you're not even looking to join, personally, wealth is an amanah, and we all should really manage our wealth according to how Sharia have it. This will benefit not only yourself, but your family, your community, and your country especially. So please do, if you have any questions, please do write them up. We will be taking a short break and be playing a 1-minute short video. And at the same time, if you have anything, any comments, any suggestions, you can also feel free to write them up.
Okay, Bismillah ar-Rahman ar-Rahim, wa salatu wa salam ala Rasulil Kareem. Well, the first question from Egypt, thanks. Thank you very much for that. How to teach basically teenager or kids of all the personal finance, any recommendation for learning serious books? Well, It's a very important questions because it's addressing the kids and the young generations. And to me, training and educate the young and the kids, children at the early stage would be basically safeguard them and put them in a very proper pad, you know, how to manage their wealth, how to manage their debts, and so on and so forth. Because the recourse of the bankruptcy among the generations basically is almost on the teenagers and the age also between 25 to 30 plus. Bankruptcy is very high. And one of the reasons of the bankruptcy, especially on the credit cards and other personal financing, is non-proper basically management of the funds and the cash. So if they have been educated since early days, I think they will be very cautious how to manage the wealth and manage between saving, investment, and spending. How? It's number one, the parents. I think the obligation will be on the parents, number one. They should be the one who basically provide that kind of guidance and educations. In addition to that, there are some materials. Here, Bank Negara, which is the central bank of Malaysia, provide this kind of financial literacy through AKPK, through even MFPC and some professional bodies that use this kind of materials to educate the young generations. And there are some publications also, book for young generations, and sometimes published in a cartoon format in order to address the kids and generations. Also, the recommendations of the former governor of Bank Negara, Tan Sri Zaiti, she recommended basically that the financial literacy should be started from the kindergarten. So I think educations and financial literacy should start from the kindergarten and goes, you know, slowly, similar to other subjects, you know, it will be integrated part of the educations and part of the syllabus, like you study English, like you study Bahasa Malayu, like you study history. So the financial literacy should be part of it, and they will be educated throughout in order to ensure that proper learning in managing this wealth. That's, to me, the best way to do it. And when it will be tested, you know, the Quran al-Karim use the فَاخْتَبِرُهُمْ, the ikhtibar, the terminology of the Quran to test the person, whether he's financially capable or not, or what's call it in Islamic law, the maturity of the person, meaning a proper management of the wealth and a very sound manner. This one will be true testing. That's why Quran is saying, فَاخْتَبِرُهُنَّ. So the ikhtibar and testing will be conducted before you hand it over the wealth to the person. So same, you know, educations and the kids should be through testing, you know, and learning and giving them materials and education, and from the government to be integrated in the education process from the kindergarten throughout. That's, I think, my answer on the first question. So the second question is from United Arab Emirates, saying financial risk versus financial security from Sharia point of view, meaning invest or save, which one is preferred? Well, actually, both are recommended. Both are recommended, but maybe you start with the saving first, then you move on towards the investment. Or when you have the threshold of the 6 months, when you run the saving ratio, where you divide the saving on the gross income, by right, it should be within 10%. If whatever above the 10%, it can go for investment. In the Quran al-Karim, if you keep the money saved idle, it will be subject to 2 issues. First one, zakat, it will be subject to zakat, and number 2, inflation. So meaning that if you keep your money, if you have, let's say, 50,000, if you have 100,000 dirham, and you keep it saved in your saving account, every year you have to pay zakat 2.5, and it will be subject to inflation. So it depends on the rate in United Arab Emirates. Inflation, like for example, here the inflation rate is around 4%. So meaning that in order to keep your money sound, maintaining the value its value, you have to invest the money within 6%. 6% from standpoint of the financial planner, it is saving, not investment. Why? Because you are just setting off the 2.5 of zakat and let's say 4% of the inflation. So meaning to keep your money sound, status quo, having its value. So you have to invest within a 6%. Above 6%, it can be regarded as a real investment. But within 6%, you are basically maintaining the value of your money. So that's why actually you have to combine, you have to balance between saving, because you may need some money for whatever emergency cases, and you need to invest to increase and expand your wealth, which is Sharia compliance. And the Prophet ﷺ said, you know, اتجروا في أموال اليتامى, meaning the person who is safeguarding the interests of an orphan, he cannot just keep his money idle until he reaches the age of competency, hand over maybe half of the wealth to him. But he said, اتجروا في أموال اليتامى لا تتركوها تأكلها الزكاة. Otherwise, it will be subject to zakat. So 2.5, 2.5, 2.5, 2.5 every year. So the wealth will shrink. The wealth and the money will reduce. Then you add the inflations, basically, it's a substantial losses for the orphan under your custody. This is why what you have to do, you have to invest the money to keep it basically live and to keep it safe, and also to invest it. So both are recommended, both are needed, but maybe you start with small saving, then whatever surplus you push it for investment. Or if you want to be, I may say, a bit smart in a way, you put everything in investment, but you have to balance up between secure investments that will be categorized under cash or cash equivalent, meaning that you put it, let's say, in Islamic FD, or Islamic FD, or whatever a product, structured product, or a money market product, or any product that can be unlocked easily, and the balance in long-term investment, medium long-term investment, and you balance up between the fixed and the long. You balance up between low-risk investments and high-risk investment in stock market and so on and so forth. This is, we call it the portfolio management. So you have to do that. But even you put all your money in investment, provided the saving is in a lock-in investment, like an Islamic FD. The Islamic FD can be unlocked anytime, and it is 100% secure and safe. So it's considered as basically saving. So that's my advice. Both are recommended. The question, I try to be brief so we can give more, we can answer more questions. How to evaluate the product of investment? Yeah, basically, when you evaluate the product of investment, you look mostly, people will look, number one, of course, of the revenue. What's the profit rate? What's the revenue of it? Number one. And number two, the risk. So as you know, high risk has a high return. So you'll be driven by the return. How much is the return from this? This is why if you look at the accounts, for example, in the banking, you see the saving account is low, then above it, the fixed deposit, then above the fixed deposit, the investment account, which is unrestricted, then the restricted investment account will be above it. So different classes of investment, each one has its own risk, and each one has its own return. This is why in the financial planning, we have one section, if you go to the financial planning, fact-finding sheet, we have one sections with the 10 points determine the risk appetite of the client, meaning that I give you 10 questions, tick, 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 then I will get the score. The score will determine your risk appetite. If you are a high risk taker, so when I do the execution or when I put the recommendation, I will put recommendation for high investment risk. If you are very conservative based on your score, so basically your investment will be in a low investment classes. So this one will determine by the question. And based on that, basically you do what's so called the investment. But mainly they will be driven by risk and return. The other, this one from Malaysia. The fourth question is from Russia. It would be great if you receive a typical Sharia. They can see that without reading. They can see the question, right? They can. Yeah. So this is question basically asking for the template of financial plan, maybe we'll share with the Ethis crowd, and they can share it on the website. So at least you have an idea. And if you go back to one of my books, which is Reading in Financial Planning, which is published here in Malaysia. In the book, there are three cases included in the book. And these cases are comprehensive financial plans. So you can go through this plan. And the shortcut, of course, will provide you through Ethis crowd on the website. Question number 5. Average individual who are making yeah, I agree. This is from Singapore question. Yeah, you can see the questions. Is a middle class or sometimes lower middle class or the B40. Sometimes how to basically do investments, whereby whatever they have is within the means basically. So they are very struggling even to make a saving. How about going for investment? I think one of the recommendations here is a very challenging question, to be frank with you, because the recommendation of the financial advisor will be based on what information that you have. Now, the issue is that why financial advisory is quite important, because sometimes the person doesn't know the potential that he has. Then the financial advisor will help him to unlock that potential. You tell me, for example, you don't have money saving, but maybe you are staying in a big house with small family. So the recommendation of the financial planner, what will be, move to a small house with small rental and rent your house with a higher rental, you create surplus. But you don't think that way sometimes. So the issue is when you engage the financial planner, then you disclose your asset and disclose your cash flow and your asset and liability. So the financial planner will help how to manage your debt, how to create surplus. Maybe you have 2 motorbikes, one new, one second hand. Maybe ask you to get the second hand and sell the new one. You create surplus. That's money. It can be in working capital for a small business. Example. So it's difficult to give advice unless you engage with the clients and get in touch with him, and questions and answer will unlock the potential that you may have. Maybe you have one piece of land, you don't know how is the importance of lands and values. Maybe you have some talents that you don't know, some skills that you don't know. Maybe you can start some business from home. You can start small business with online. People, start, where is it? Is it in China or in Russia or in UK? China, I guess. One lady just started a coffee delivery business, and she became a millionaire. She created millions just using what's so called some small techniques, some platforms, some fintech, some what's so called technology platforms. And you have a Grab, they don't own cars, but they make lots of money. Uber, the largest transportations network, and they don't own one car. And EMB, the largest accommodations platform, and they don't own one single room. So the point is that you may leverage on your skills, competency, knowledge, technology, advice to create a niche business that basically move you to one successful story. If you don't have that, one way is to have a group and collective investment scheme. Let's say, for example, you, your brother, your sister, or your family, your neighborhood, your kampong. See, this grouping, 1 ringgit cannot do anything. 1 ringgit will not help you, but 10 ringgit may help you to do something. I mean, you cannot buy a meal with 1 ringgit. But 10 people, everyone contribute 1 ringgit, it creates 10 ringgit, can buy a meal where the 10 can share it, proportionate. So that's the other way, if you struggle, so basically the grouping and the social basically finance and the grouping can be a way basically to create fund through microfinance, through maybe maybe family that may lend you based on the Qard Hasan money, then you can start something, and so on and so forth. So this is just a generic answer, but actually it should be based on engagement, that you find some potentials, opportunities that you have. Then the financial advisor or the financial planner will help you to unlock that opportunity. And I think that's the last question so far. I hope I have somehow even partially answered those questions, and if not satisfied, we'll be in touch in the future, inshallah.
Let me just confirm, there's some more live questions, right? The Q&A ones. At the moment, it's still all right.
What do you mean by what I mean by SPF is the Sharia Financial Planner. I just make it short for the slides, but I mean SPF is a Sharia Financial Planner. And this one is basically awarded by the Malaysian Financial Planning Council, which is the MFPC. So there are modules you have to undertake. Then when you finish the modules, then you will be confirmed with the RFP. Then you can join advisory firms, financial advisory firm. Then you can provide the consultancy and get license and so on and so forth. And the good thing about this is that it's combined professions and entrepreneurship. Give an example of the one who, for example, she gave me, you don't have money to start business. The business doesn't need all the time capital in a form of cash. Sometimes it needs the intellectual capital. Example, you go for a profession as a financial planner, you have educations, then you create entrepreneurship. You can establish your own firm. And the same goes for unit trust, Takaful Asian and others. Having qualifications will enable you to basically offer some product and business as an agent and generate some revenue, and you build your saving and you convert it into capital and investment. That's, inshallah, will bring prosperity to you and to everyone.
Right, the second one, asking for a book recommendation. Any book recommendation?
Yeah, I think, sorry, but I have to give you my books. If it's not a promotions, I have, alhamdulillah, I have published 7 books in the financial planning, most of them as an editor, which are published by the Malaysian Financial Planning Council, and they are published by IPFIM, so they are available in the market. One of them is this, which is the applications in Sharia Financial Planning. And others are basically reading in financial planning where they have cases. So here it gives you how is the financial planning profession is conducted, what are the cases, and the formula and the asset and all the ratio, how it is done and applied. So it gives you good feedback. Yeah.
This person that asked is from Indonesia. Do you have the book in Indonesia as well?
Indonesia, I'm not sure. I'm not sure, but if you just check the website of IPFIM, IBIFM, IPFIM, publications, which is this basically, you can find them. Yeah, but Indonesia, I'm not aware about that.
IBFIM. Okay, that one, let's skip that. Okay, this one is asking about individual, group financial planning. When several people gather their wealth for group purpose.
Yeah, that's what I just mentioned. It's now as one way basically to start investments or to start a business. Sometimes, as I mentioned, everyone has one ringgit or 100. The 100 cannot do anything, but getting 10 is become 1,000. 1,000 can do something, and it goes like this. So basically, either within the family, even within the neighborhood, and within the kampung, or sometimes even as a Qard Hasan, people sometimes are very generous to start mudaraba. Mudaraba basically, this is one very important point. So you don't have money, but maybe someone else has money. So they will not give you the capital as a gift. They will not give it to you as a qard, but they give it to you as a capital provider. So the mudaraba venture will be established, will be the capital provider, will be the Rabbul Mal, and the person will be the entrepreneur who is basically the mudarib. And he will take the capital. So contributions from the person 0, contribution from the capital provider 100%, then they start a venture of mudaraba, start business, generate money, share, and grow your what's so called portions of return slowly from saving into investment. So it doesn't mean that you don't have capital, you cannot do business. You can still do business if you find someone that engage you in the mudaraba concept, whereby it's a combination from work and capital only.
We do mudaraba like
yeah, and Ethis crowd, they have a concept of mudaraba in their platform. Yeah.
Alhamdulillah. Yeah, that should be good. The rest, I think we'll get that offline direct taxi in the MAQASID. Yeah. Right.
So I hope we have answered most of the question, and the others maybe due to the time concern. We cannot go through all of them, but thanks you for your interest and concern and for your questions, and hopefully we have time in the future to address them, inshallah.
Inshallah, maybe a second session to go deeper into
inshallah, maybe you can go to some concept.
All right, okay. Thank you very much, everyone, for listening in and staying tuned to the webinar today. And again, thank you very much, Prof. San. I think after this, we got a short pitch from our communication expert, specialist communication. He's also here joining us today, and he'll be taking over me in a while, which afterwards we'll play a short video.
Ya, mungkin dalam kehidupan enakan di rumah sendiri daripada ngontrak gitu ya. Iya, ngontrak kan, makanya saya ada di sini ngambil, agak merasa ringan juga, agak terjangkau gitu ya, namanya masih kerja gitu, suami nggak begitu jauh, udah gitu saya udah lama nggak punya rumah, jadi sedih saya. Udah lama saya nggak punya rumah, pernah ngambil rumah juga dibohongin, saya sampai habis-habisan jual gelang, jual kalung, uang muka 10 juta saya raib, dibohongin sama developer.
Kan panas terus ya keadaan ya pokoknya kalau di sana ya kurang inilah gitu ya, udah rasanya kurang nyaman. Saya kan udah lama di sana juga, berapa 30 berapa tahun ya selama nikah? 30 tahun, anak saya 4 cowok semua, 7 1. Ya tadinya kan cuman buat invest kan. Cuman buat istilah kata simpanan selama kita masih kuat mampu gitu, buat ya ntar kan buat anak cucu lah istilah kata ya.
Insya Allah kedepannya mudah-mudahan kita bisa bekerja sama kembali dengan para investor dan juga dengan Ethis Crowd. Terima kasih. Assalamualaikum warahmatullahi wabarakatuh.
Kita mau say thank you untuk Ethis Venture dan kepada para investor terutama karena udah bisa membantu kita di sini mendevelop proyek kita yang di Bogor ini, dan kedepannya supaya kerjasama kita semakin baik dan bisa semakin besar.
Semoga ya Ethis dan Kasafera bisa berkembang bersama, meraih target dan harapan masing-masing sesuai dengan goals-nya. Kedepannya kita sama-sama lah untuk menjalin silaturahmi juga, menjadi lebih besar dan bermanfaat untuk banyak orang. Amin.
Amin. Thank you.
Kita mau terima kasih kepada pihak Ethis dan para investor yang telah percaya kepada PT Anugerah Karya Bangun untuk investasi ke dalam proyek Mutiara Muktiwari sebanyak 30 unit. Baik, itu aja dari saya. Terima kasih.
Alright, Assalamualaikum warahmatullahi wabarakatuh. So before we end this webinar, mashallah, such a great presentation by Prof. Dr. Hassan. And before we move on to the ending this webinar, I would like to request our viewers to stay for a little bit more, just a very short presentation about Ethis Crowd. So the presentation is about Ethis Crowd's journey, where we came from and how we started in 2016 and where we are right now in 2019. Start with our mission. What is our mission in the moving time? So of course, we started from 2016 and we have seen ups and downs in the industry, but definitely we have been stepping up every year, not just every year, every month, with the support of our investors, with the people coming from 65 countries, with all over the globe, people coming together and supporting our movement. Our mission is to be the leading provider of Islamic crowdfunding and fintech globally. Not just that, with the support of first mission, creating a marketplace to circulate good on a universal principles, on a universal level as well. What is our mission? Our mission is to create unicorns for the Islamic digital economy by 2022. So to do this, Definitely, we'll be facing problems, we'll be having challenges. But to rectify those, first of all, what we have to look at is the problem in Islamic finance or Islamic financial industry is facing as of now. Let's look at some of the problems and talk about it. So to start with, if we look at the problems on a wider perspective, I would say direct investments and charities are not channeled onto the right people or to the masses, but in the Muslim world, it's very much broken. And the main reason to that, I see it as this financial industry or the financial institutions serve only limited segments, not the masses. It's not for everyone. There is a broken chain. There's no balance between the people who need or between the people who want to give. So to maintain this balance, there has to be solutions. Moving on to the other problem, which is about how Islamic finance has the potential to create social impact, but still it's not able to, and how it's been viewed with suspicion across the globe. How Muslims and non-Muslims, people around the globe, they look at Islamic finance with suspicion. With that, the local capital flows are very poorly organized. It's not the way it should be. Along with it, the global cash flows lack intelligence or facilitation. They're not, again, moving on to my first point, they're not channeling on to where they should be going. Again, just to mention, people who need it or people who want to give, there's a huge imbalance. Let's talk about solution. What can be the solution of these problems? The solution is to create a marketplace where all of these people can come together. And how these people can come together? Based on Ethis's model, what Ethis has designed as a model or as a marketplace for everyone to come together and support each other, or to balance this economy, or to create the balance in between people who need and in between people who want to give. To support that, a digital platform where investors or where people who want to invest and want to make money at the same time, but without the involvement of riba, without the involvement of interest, and at the same time, they do not only think about profitability, they also think about the social impact. What is the impact of their money? What impact their profits or their capital is actually creating apart from just profits? So Ethis focuses mainly on countries or on projects that have social impact, that are creating an impact for people who are in need, people who are of low income, or people who cannot afford basic amenities, and for people who have money and they want to they want to multiply it. At the same time, they want to have a social impact with their money. And all of this is being done under the guidance of Sharia compliance, under the guidelines that have been given to us by Sharia. So let's talk about a few numbers and about how our journey has been. Ethis in total, our growing community is more than of 26,000. That includes that includes banks, that includes people, that includes individuals, and these all people, banks, institutions are coming from 65 countries. We have a total value of projects of more than 52 million, and the amount that we have crowdfunded until now in last 4 years is more than 7 million. If you want to quantify the social impact, it's very interesting actually. If you want to see what your money is generating, not just in terms of profits, but also in terms of what social impact it's having, what your money is being invested in the real economy, and how it is affecting people. So if you want to quantify it again, Ethis's projects have developed more than 7,000 affordable houses, and more than 29,000 people have got benefit from it. Let's look at geographical locations of our investors, where they actually come from. So most of our investors are mainly right now coming from Singapore. The reason is we're a Singaporean company, we're Singaporean based, and our name in Singapore and in Southeast Asia is very much prominent. But with time, alhamdulillah, we have grown up, we have grew, and now people all around the globe, they're talking about us and they're coming to join us with this movement, with participating not just because of profitability, but also to have a social impact. I would request all of my viewers to join our movement, and let's discuss more how Islamic finance can have impact, and how Islamic finance can actually channel what should be channeled from the people who want to give and people who are in need. Thank you so much for this opportunity, and inshallah, we'll be expecting you all in our movement. Thank you so much. Assalamu alaikum warahmatullahi wabarakatuh.
Thank you very much, everyone.